Good news today for Tesla stock. We got two big Tesla stock price target increases. Let's go through all of today's Tesla stock news. Elon Musk today is doing business in Italy. Elon met the deputy premier and foreign minister. They talked about automotive and aerospace and sectors where Italy has cutting-edge manpower and technology. And if you didn't know, these giant machines that make gigacastings, they do come from Italy. So Italy is an important piece for Tesla. Elon also met with the prime minister. Yes, that's right. She is the prime minister. And obviously, she is a huge fan of Elon Musk. At least on the surface, it seems like the trip so far is going really well. It also appears that maybe we will see another Elon Musk interview. No big announcements or major rumors coming from Italy about Tesla though. Moving on, Tesla has increased the price of their wall connector in the US by $50. And this is sort of big news, I would say. Morgan Stanley says that the net present value of Tesla superchargers, if I'm not mistaken, is already $78 per share. This is in the monopoly case specifically. The charging business, while it is relatively small, it does have a tangible and material impact on Tesla stock, I believe. Although I don't think it's going to like triple, quadruple, or 5x Tesla stock by itself alone. We have good news from Germany, from Giga Berlin. Tesla is reducing the number of temporary workers. Now, normally you would say that's maybe bad because the demand is not as good. And that means people are not buying the cars maybe, and therefore Tesla's producing less cars. But I don't think that's what is going on at all. I think Tesla simply is trying to improve its margins, and in Europe, the work culture is also a little bit different. People are not as inclined to work on weekends as they are over here in North America. So not having to work on Saturdays and just doing more work from Monday to Friday, I think works in Tesla's favor here. What I see is margins that will be higher. Tesla is doing a little bit of a delivery push in the US for the Model 3 for the end of a quarter. Customers who order and take delivery of a new inventory Tesla Model 3 between now and the end of a quarter are eligible for 3 months of unlimited free supercharging on their vehicle. This is also good news. Tesla appears to be deploying FSD beta test vehicles in South Korea, Japan, and Taiwan. It appears that things are going well for Tesla in Canada, which is where I live. And all of these vehicles that you see here, all of them apparently are sold already. And more good news, Daiwa Capital raised their Tesla stock price target as well from $185 to $285. A bit late, but hey, I welcome that. And then the other big price target increase, which I covered in the last video, which if you haven't seen, you have to watch that video. There's an important paradigm shift going on with Tesla stock, I believe, and Tom from RBC explains why he increases Tesla stock price target from $212 to $305. And I know many will also say these analysts are just chasing the Tesla stock price. If it goes up, they just increase their targets, but also they could just change their ratings from buy to hold, or from hold to sell even if Tesla stock just goes up way too much and they think it's not a good buy anymore. And analysts being bullish on Tesla stock, I think it helps the stock a little bit as well, although not all that much, but it does have some impact is what I believe.
It does feel like there is this enthusiasm once again around EVs when you think about what's been happening with Tesla as well. Sure, there was that announcement with a partnership with GM as well as Ford, but is there a bit of FOMO trade happening? I mean, you talk about AI as one.
Yeah.
EVs.
So I think we've seen waves of that, to be honest. I think we're kind of seeing some nice movement in the stock prices. You look at Ford over the last couple of days, going from, recently between 11 and 12 over 14, closing in on 15. My concern here, just trying to capture the conversation we had earlier too, is, if rates do go higher, that means borrowing costs are higher. That's another headwind for automotive loans, right? Because they will tick higher too. So the whole thing that's fascinating to me is the real transformation in this industry, where everybody, right? Ford, GM, Stellantis, Ferrari, Volkswagen, they're all leaning into this EV transition. And there are reasons for it, including some, at least here in the States, some tax credits. They're helping foster, EV adoption, right? There's some, EPA regulations and all this other stuff that are going on. So the industry's moving that way. I just think that, it's possible that it might take a little longer than expected to hit some of these forecast numbers that are out there.
I think he's talking about the numbers specifically for Ford and GM. Ford is expecting that it will grow its EV business to something like 2 million vehicles per year, but will not lose any sales for its internal combustion engine vehicle business. Now that I don't think is going to happen. But EV sales are going to keep growing fast. And is there a little bit of fear of missing out going on? FOMO? Yeah, certainly there is some, and these are often slightly dangerous times to get in if you are looking to make a quick buck, because the whole thing could turn around at any moment. And personally, I would love to see that happen, because I would love to load up on a lot more really dirt cheap Tesla shares. But just to be clear, I think Tesla is still way undervalued. And even if you are paying a little more now than before, I think it's still a great deal, specifically in the long term. Ford and GM, though, they are benefiting from this rally. Ford is up almost 30% in the last 30 days. GM is up about 20%. But Nikola, that one is a bit surprising because it's up about 100% in one single month. Although, just to get some context and to have a better perspective, all you need to do is just zoom out a little bit and then you see, oh, it's still down a lot. But this actually does not still represent a good picture. You need to really go back, and then you don't even see this recent rise.
At the same time, right, you have to ask yourself, okay, companies are spending and investing to do this, but if we do see a slowdown because of higher borrowing costs, what does that mean in the near term for their profit picture?
But to pick up on that point about the higher borrowing costs, you were talking about tech earlier. I mean, we saw these stocks get hit at the start of the rate hiking cycle, right? The expectation was that these companies aren't necessarily profitable. They've got a lot of debt. These are the companies that are going to get hit as a result of higher rates. And yet it feels like we're kind of back to where we were before that in terms of the enthusiasm. Sure, in tech you can talk about AI specifically, but EV, the growth has been happening. Why now? Why are we seeing this kind of
I think you
rally?
I think you got to kind of differentiate, right? So there are some larger established players like the ones that I mentioned, Ford, GM, and then there's the ones, the Rivians, the Nikolas, and the like. And it's very simple. You can't churn out, what would we hear, 10, 20 vehicles, right? And that's not going to cover the cost of your operation. So I think there's a reason that some of these stocks are down towards the bottom. But I also think, though, too, if you look at the automotive industry from a structural perspective, it really tends to solidify around a handful of players. And again, if you take another look at it, you look at consumer electronics or some others, the vast majority of market share tends to be concentrated around, again, a handful of players. Will all of these companies make it? Probably not.
There's one more huge difference between Tesla and all of these other EV companies, and that is Tesla is actually also an AI company. Tesla is not only benefiting from the EV rally, but also it is benefiting from the AI rally. And in the short term, let's say interest rates keep going up, while that would be bad for the Tesla stock price in the short term, in the long term, I think that actually puts Tesla, the company, in a better position because it hurts all of these other competitors much more than it hurts Tesla, because Tesla's margins are by far the highest. And then money becomes expensive. It is more difficult to expand and build new factories for our players because money is just more expensive. The borrowing costs are more expensive, and Tesla is extremely efficient when it comes to building factories really efficiently without wasting any money. So Tesla can still expand a lot even when money becomes expensive. Others, not as easily. So that would put Tesla even further ahead. So in a way, higher interest rates are actually good for Tesla, but certainly not short term.
The Nikola part is more memey than anything else, right? It does feel like it's interesting to me that the meme stock raise has persisted in different ways. It's more like little flare-ups of these individual situations and short squeezes, perhaps. For example, Nikola, something like 20% of its float is shorted. So but I don't know how much at one point it felt like investors needed to pay attention to it to some degree, other investors who weren't part of it. Now it feels like you can kind of ignore it. I don't know.
It could very well be people are just looking for a quick trade too.
Yep.
I personally, I am staying far away from that stock. The fundamentals to me are horrifying. But short term, if you can time it well and if you're a good trader, maybe you can make some money, but that's just not what I do. I invest strictly based on fundamentals, and the fundamentals for Tesla stock look good in the long term.
Thoughts are on Tesla stock as today it snapped a 13-day winning streak, probably the most overbought stock on the streak. But as the company continues to be a force in the EV market, as they close out their charging deals with Ford and General Motors, not to mention that today Morgan Stanley reiterated Tesla as overweight.
Well, look, I happen to think Tesla's a really good company. I tend to look at how dominant they are, and they're the most dominant company in the industrial phase that I've seen in ages. And I think when the stock comes down, it was up 13 straight days. When the stock comes down, when the stock comes down, maybe you buy some. But I'm not against Tesla at all. I think it's a good situation.
It is quite popular to make fun of Jim Cramer, and sometimes for good reasons. Looking at the inverse Cramer tracker ETF, though, it is down, meaning that Cramer's picks actually are making money lately. And supposedly his hedge fund, which he ran for almost 15 years, returned an average of 24% per year. But that was more than 2 decades ago. It is going to be super easy to miss the next big run for Tesla stock. Elon says, yep, to the thing is about hyper exponential growth. Even those who see it coming can't possibly process the impact. And looking at Tesla stock, I can understand looking at this and not wanting to miss out and then just jumping on board. But I also understand the other side that says, you know what? Tesla stock went up a lot. The fundamentals haven't really changed. Other than the charging deals have just been made, but we sort of knew that eventually they will cave in and eventually they will come to Tesla superchargers. We just didn't know exactly when, but nothing fundamentally changed. You could argue, okay, well, fundamentally, if you look back at the last 9 months or so, the earnings did decline and the backlog did disappear for the most part. And now you look at Tesla stock, it went up 136% year to date, but the PE ratio has gotten worse. But just because it has gotten worse, it does not mean it's not a good PE ratio for Tesla stock specifically. I think it's still too low. It's just how cheap Tesla stock was earlier this year was so ridiculous that it lasted only for such a brief moment because other people caught on to it. And while Tesla stock is not as cheap as it was before, in my view, it is still very cheap. It's just not crazy dirt cheap anymore as it was back in late December, early January. Anyway, I'm really curious, what did Elon talk to the Prime Minister about? I hear that in Italy they do have a problem with their population declining, so maybe they talked about the population collapse too. Anyway, Italy is a beautiful country. If you haven't been, I highly recommend that you go. I've been there so many times. And in this video, I talk about why Tesla board members are not buying more Tesla stock. My name is Matt Posius. Like and subscribe if you haven't yet, and I'll see you in the next video. Thank you so much for watching.